Hello, welcome to the SMSF podcast series. I'm your host. My name's Phil. I'll be taking you through today the concept of borrowing in your SMSF. Now, having seen in the previous episode in its various segments what you can invest in your SMSF, this episode will take you through borrowing and how to set up a borrowing arrangement in your SMSF and how to maintain that. Now, most of you have heard that you can borrow in your SMSF, but in the past, prior to September 2007, you were not allowed to borrow in your SMSF. And obviously, the tax office had not, prior to that, set up any of these limited recourse borrowing arrangements. Now, if you had a trust deed prior to 2007, chances are that the trust deed would have stated that your SMSF is not allowed to borrow full stop. And therefore, you need to update your trust deed in order to incorporate the new changes in super laws that do allow a SMSF to borrow under a limited recourse borrowing arrangement. Now, generally, when you borrow funds to purchase a property and so on, you would borrow for a residential or for a commercial property under your individual name or under a trust or whatever business structure you have. Usually, it's a little bit more lenient. There's no rigorous processes or anything that needs to be done. But because it's an SMSF, there are rigorous processes that must be done because your SMSF cannot directly borrow. So you need to have something in place for the SMSF to be able to borrow. Now, these laws were introduced effective September 2007, and ever since then, they've been improved upon and they've been changed, and there have been a little bit of changes and improvements to the rules and regulations that are centered around borrowing. Now, the way that a SMSF can borrow is simply that if your trust deed allows it to borrow for a specific asset. So the borrowing in an SMSF is for one single asset. So let's get that straight. A specific asset. It cannot be a group of assets. It needs to be one asset for a specific period of time. A specific borrowing amount and an interest rate will need to be applied, obviously, along with repayment options. So that needs to be in place. Now, before even thinking of deciding to borrow in your SMSF, you need to include this in your investment strategy, which was discussed in the previous episodes. You need to include and explain how the borrowing will benefit your SMSF in the long run, outline the risks that are associated with the borrowing, and how these risks can be overcome or minimized. So, for example, you may like to say the rental income from the property in which the SMSF is borrowing will cover the interest and loan repayments each month. So that's how the risk is going to be minimized. However, borrowing is for a long term commitment. It's usually more than 3, 4 years, more than 5 years usually, and you need to be able to maintain your borrowing and to be able to repay your loan. Now, there are extra costs associated with borrowing in your SMSF. What are these extra costs? Well, you need to set up another trust, which is called a custodian trust, or also known as a bear trust, which you would have come across with your accountant or financial advisor. Now, that in itself it comes at a cost. And then there's another cost that you would be required to set up a corporate or a company trustee for the bear trust. Now, it's recommended that you set up a company trustee for the bare trust to give you that higher level of protection and not to expose yourself as an individual trustee of that bare trust. Likewise, when we discussed in the second episode, I think it was, that it's best that you set up a company trustee to act as a trustee of your SMSF in order to reduce the exposures of your individual assets and in order to reduce the confusions of assets in an individual name versus assets in a company name, because these can easily be confused. Now, setting up these things, it can be quite costly. It can cost up to about another $1,500, depending on who you set up this bare trust with, along with the company trustee. Uh, Now, you might ask, well, isn't the property going to be in the name of the SMSF? Well, yes, your SMSF will own the property and the property will be in the name of your super fund. And yes, your super fund will make the loan repayments. So why have a bare trust? Why is there a need for that? Well, the super fund cannot borrow directly. So that's why you have the bare trust acting as the intermediary, which is the one that can borrow, or the trustee of that bare trust is the one that can borrow and that can provide the funds. And in fact, that bare trust or the company trustee of that bare trust is going to be the real legal owner of the property. But your SMSF is using the property. Your SMSF is receiving the rental income and making the loan repayments. But until the loan is fully paid, the bare trust or the custodian trust, the trustee of that, is the legal owner of the property. So, how do you create the bare trust? Let's say from the previous episode, you have ABC Pty Ltd as trustee for ABC Superannuation Fund. Now, for the purpose of borrowing, you need to create another trustee company and another bare trust. So let's say you created a trustee company for your bare trust. You can call it, let's say, ABC Bear Pty Ltd as trustee for ABC Superannuation Fund Bear or ABC Super Fund Bear. So you've got now a separate trustee company and a separate trust, only serving for the specific purpose of borrowing money for your super fund in order for it to be able to purchase a property. Now, like I said, it can cost around about up to $1,500, maybe $2,000, depending on where you go and depending on the accountants that are helping you set it up. But if you like to do that by yourself, chances are that it'll cost you far less than $1,500. However, bear in mind that the bare trustee company needs to be registered with ASIC, and it needs to pay its regular ASIC annual fee, which is around about $273 these days. Now, that's because the trustee company is not acting as a sole purpose trustee for an SMSF. The trustee company for the bare trust is treated just like any other company where it pays its registration fees of around $273 to ASIC. Okay, now what does a bare trust deed have to have in its contents? Well, the bare trust deed needs to include the following details: name and details of the lender, name and details of the borrower, the address of the property, and perhaps the loan amount and the interest rate and the term of the loan. Now, these extra details, the loan amounts, interest rate, and the term of the loan, will be more suitable if you were to set up a borrowing arrangement with a related party. Now, I'll discuss that a little bit later, but basically there are two different types of arrangements in which you can have that limited recourse borrowing. One arrangement is if you have that with an external lender, let's say a bank or another private lender, but that bank or private lender must have an Australian financial services license and a credit license in order to provide the lending funds. It must have that requirement. And usually the external lenders' requirements can be more than the related party requirement. So, if you were to go to another bank for borrowing in your SMSF, sometimes the bank may say to you, "Well, the ATO has given us guidelines about what balance you need to have in your SMSF. Now, the ATO does provide the banks a guideline that says you need to have a significant amount in your SMSF in order to borrow from a bank. Now, each bank can interpret what is a significant amount in your SMSF. The ATO has not prescribed a set amount. But each bank can, let's say, for example, one bank has a policy that says you need to have a minimum of $100,000. But another bank may have another policy that says you need to have a minimum balance of $300,000. So there's a difference. That's a different interpretation of what it means to have a significant account balance in your SMSF, because at the end of the day, you need your SMSF to be able to cover the purchase cost and to cover any after costs from the purchase. So if GST is applicable on a property, let's say you've purchased a commercial property, GST sometimes will be applicable, and therefore your SMSF will need to have that money to cover the GST component. And settlement proceeds as well. There may be extra costs on settlement, so your SMSF needs to have sufficient funds to cover the settlement costs of purchasing your property. So please bear that in mind, and these costs can be different. They can be different depending on which conveyances you go to and depending on what's involved in the property and the purchase. Now, let's say, for instance, that you don't have that minimum balance that the bank requires. It's not the end of the world. You can go through a private lender or through a broker that they can refer you to a private lender that don't really worry about a minimum balance in your fund and is not constrained by what you have in your super fund. All they will like to know is whether your super fund is able to service the loan and to make these repayments in a timely manner and on time each month. And chances are that the private lenders would want to see how much rent is the property going to generate for your SMSF, and whether there's sufficient cash in your SMSF that can cover the loan repayments. Now, the other thing is that the lenders are not going to provide you with the full amount of the purchase price. So I need to make that very clear to you. The lenders will only they can lend you anywhere between 45 and up to 80%. And again, that depends on what type of property it is. So if it's a residential property that you're wanting to borrow to invest, the lenders may be more lenient and offer you up to 80 or 85%. Of the purchase price. So it just depends on where you go, and you need to really shop around to have a look at what the maximum percentage is. We call this a LVR. Loan value ratio. So, if the property is going to cost you, let's say, $150,000, the lenders may provide anywhere from between 50 and 80%. If it's a commercial property, lenders may provide you with a maximum of, say, around 65 to 70%, because commercial property is vastly different than residential property. There's GST involved in the purchase price and in the rental transactions. So that's what, and the interest rates as well are quite higher. The interest rates on a commercial lending can probably be as high as around about 5.7 to 6%, as compared to a residential property lending. The interest rate may potentially be as low as about 4%. It just depends on the borrower, and it depends on the lender as well. It depends on what they're willing to offer you, and it all depends on the purchase price and on the amount that you want to borrow and on the term of the loan. So the term of the loan, usually for a residential property, can be up to about 25, maybe 30 years. But for a commercial property, the maximum term that a lender can offer you is probably somewhere up to about 15 to 20 years. So you need to bear these things in mind when you go to an external lender in order to obtain a borrowing. Now, let's just say you are unable to borrow from an external lender. The bank or the lender may not take on and lend you the money that you're after. The other option is you may like to do a related party limited recourse borrowing arrangement. Now, what that does is the related party can be, let's say, for example, your own company which runs a business, and your own company has sufficient funds in order to lend to your SMSF for that property. So let's say that you use your private company to lend to your SMSF. You still need to set up the Bear Trust and the trustee company for the Bear Trust. But the extra details that are required is what the loan amount is and what's the term of the loan and an estimated rate of interest. Now, if you have your own company that will lend to you, again, the interest rate must be at market rates. It cannot be way below the market rates because otherwise it will breach the SIS rules and your SMSF will be taxed at 45%. And chances are it may become a non-complying super fund. So you need to be very careful, even if you're going through a related party borrowing arrangement. The interest rate needs to be at market rates. So, for example, if you were to get 5.5% from an external lender, that will likely be the interest rate for the related party loan. So your company, your private company, will have to charge an interest rate of around 5.5%, around about that. So they're just some matters to take into account. Just because you've gone to a related party or lender, it does not mean that you can use your own rates. So you still need to abide by the market rules and the market rates. So like I said, borrowing is a very lengthy, strenuous task, and it needs to be set up correctly. Now, let's say you've borrowed and you've set up the borrowing, you've got the funds, everything's been taken care of, and everything's at market rates. And let's now say that your company that runs a business, let's say that it owns a premises in which it runs a business. No, sorry, scratch that. Scratch that. Let's say your company provides you with the funds for a completely different commercial property or a residential property. And let's say there's already existing tenants in that property. So what happens there then is you've got your borrowing, you've got your loan. You will need to have two transactions to bear in mind. One, the tenant of the property will usually make those rent repayments, those rent payments each month to your SMSF. And obviously the rent payments each month will be taxable in your SMSF. Now, your SMSF will then make the loan repayments to your company, being the related party in which you'll obtain the loan. The loan repayments with the interest will be payable to your company each month, depending on the agreement and depending on the amount of the repayment. So, in that case, your company will have to declare interest income and declare it in its company tax return. And your SMSF will be able to claim interest expense as a tax deduction on the loan. And that way both of you benefit. Your SMSF will claim a deduction. However, your company as a related party will need to declare that interest and will be paying 30% or 27.5% tax on the interest, depending on whether it's a base rate entity. So they're just some factors to bear in mind when it comes down to making those transactions. Now, let's say that your company is going to provide you with a loan to your SMSF for a commercial property, in which then the company in which your business is running will move into and will occupy. Now that's fine. You now have a scenario where your company, which runs a business, is looking to move into the premises, into an office or a warehouse or a factory in which your SMSF will invest, and your company will move into that premises to occupy and to run its own business. And that company actually provided you with the loan funds. That's fine. In that case, your company, your business will be paying your SMSF the rental amounts each year. And in turn, your SMSF will be making the loan repayments and interest to your company. So the only change there is going to be the transactions between your company that will pay your SMSF the rent, and your SMSF, well, as usual, your SMSF will be paying your company as a related party loan. So that's all fine as long as you do it in the right way, and as long as the market rates are applied, and as long as proper research is done, and you've outlined that in the investment strategy, that it's going to benefit your SMSF in the long run. Now, the other thing to bear in mind when you set up the bare trust deed, that can also sometimes be known as a declaration of custody trust. Depending on the state where you're in Australia, the bare trust deeds required to be stamped by the relevant state revenue office. Now, let's say, for example, in Victoria, the state revenue office can issue a certificate of duty, which means that you lodge a declaration of trust via Duties Online, and you pay the $200. Now, you don't need to physically have that stamped. You can obtain what we call a certificate of duty, and that you'll have for your records, for your own records. So that's something that you need to bear in mind as well. There's an extra $200 that you need to have. You need to pay that within 30 days of your trust, of the bare trust being executed, and that way the State Revenue Office will provide you with a certificate of duty. So I hope I've covered the various aspects of borrowing, and what components of borrowings you need to look at, and the different types of borrowing. Now, the other thing, your SMSF can borrow also for uh, improving a particular property, but that needs to be under another limited recourse borrowing arrangement. Or it could be borrow for purchasing a significant amount of shares, but we don't usually recommend investing in borrowing to invest in a stock market, because we know how volatile the stock market is. It's more volatile than the property market. But there are just some other types of assets in which your SMSF can borrow for using a limited recourse borrowing arrangement. But the most common type of asset that the SMSF can borrow for a limited recourse arrangement is property, and that can be residential or commercial property. Stay tuned for the next segment, which will discuss some of the capital gains issues, and it will also discuss what you need to do in order to prepare your end of year annual accounts and the audit report. Sorry, capital gains has already been discussed in previous episodes. We are at the home stretch of operating and maintaining your SMSF. So the next segment, the next episode, will just focus on the annual financial accounts and the audit report, and obviously what auditors are going to ask you and what they want to look out for. So stay tuned.